market update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at HaneyFarms.com. So Ann, how do you feel about this market right now?
Well, it's good, it's strong, but you know things don't last forever. So lots of optimism out there. You know, you can't, you just, my nature says, let's be a little careful here.
Feels like we've sort of worn out our welcome and we feel a bit
choppy?
Well,
on the fed cattle market, I'll say yes. I don't think that that's necessarily a big surprise. We talked about March, April highs. I know it's only March the 1st, but I do think the highs potentially could be looking a little earlier this year. And again, the whole demand side, we've got prices up, but are things stalling and slowing out? So is it the end? No, but it could easily take a breather.
Okay. And so when we were at NCBA, CattleFax had predicted a $300, and we talked about this last beef market update, but a $300 a head swing. I don't know what that works out to, but could we go that low? Like, is this gonna be? What is this market gonna be like? Like, is it gonna be a fast race down, or is it gonna be sort of a ebb and flow, moving our way, meandering down?
Well, I think a couple of things here in the front run. If we are making our highs in earlier rather than later, i.e. early March instead of, say, late April, which that looks to be kind of what's going on, I don't think there's a supply situation right directly behind them, most certainly not in Western Canada anyways, for April, May to really see this market change drastically. So I think that maybe means more of a meandering off of this high. It will trend lower. Don't forget, we talk about that $300 range, but an average decline off your spring high to your summer low is that 13-14% range. Guess what? That takes that U.S. market sub 120. And
we got some high breaks.
That will be a surprise. Now, there's been opportunities to hedge, to lay off some of that risk on this high-priced inventory, especially south of the border. But if you haven't done it, and if I am at all correct on this typical seasonal decline to the summer, then there's going to be some nasty losses.
Yeah, there's some high breaks out there, but I think guys are hoping, I don't know if they're betting, but they're hoping for a break to the lower of the dollar, and as well maybe some lower corn prices based on a high acreage plan.
Yeah. I mean, those numbers are most certainly starting to show up a lot more. If we're looking at close to 6 million more acres, and a carryover starting to get up into from a percentage stocks to use ratio up into the double digits again. We haven't seen that for a while, so that could change the whole feed side of the equation. So where there's smoke, there's fire, right?
So a lot of this has been about the feeder. What about the rancher, the cow-calf sector? How are they looking at this market right now?
Oh, I think out there there's lots of well, first of all, relief. Feeling
yippee.
good. Yeah, yippee. So we're there. We've got some good things happening, and I also don't think this supply scenario is not going to change overnight. So for all the problems on the supply side of the feedlot sector, those are still going to continue to be the strong points on the cow-calf sector. So we need moisture, we need all those kinds of things from Mother Nature, but as far as the market concerned, I don't see anything going astray on that side of the fence.
There can't be any worry about anything but a strong market in the fall. Like, what is there anything to lead us to believe?
Well, there's always something.
Come on, what would lead us to believe that we're going to have a weak or weaker calf run?
It won't be weaker, but in relationship to the U.S., you could have a strong dollar up here that changes our relationship to the U.S.
Okay.
Those kinds of things could kind of maybe take us off the track we see today. The track we see today, absolutely, is going to be stronger than last year. Price is very much in line with this higher trend we see in the U.S. We see it in the feeder market today, and it's pretty rare that, especially on grass cattle, that you see any lower prices in August and September than you do here in March. So
the guys that are calving, we've had a pretty good winter for calving.
Yeah, and the forage supplies, all those kinds of things have been positive for the ranchers. So, but at the same time, as soon as we get complacent, and this is always my message, Sean, as soon as we get complacent, something does go astray. We know that. We've been around too long.
We tend to think too negatively.
Yeah, well, it's going to be a good year, but there will be surprises. So that's why we got to kind of take care of the management of the risk, especially on the price side. And I know Kevin's going to talk about that tonight.
Yeah, well, CattleFax has been hammering that. CanFax Cattlefax has been saying it. You've been saying it. Risk management is it's do not avoid it.
There's too much on the line. The swings we talk about, these big prices, it just means you've got all that much more on the line to lose.
So I asked Kevin the same thing in an earlier interview. Right now, U.S. trading in Nebraska 130s. We're going to see these highs again in the fall?
Oh, I think just looking at the numbers side of it, I could easily make an argument for higher highs in the fourth quarter than what we've seen here at the spring highs. So again, supplies, we're still getting through drought cattle, we're still getting through, some big placement numbers. So I think by the time we get into the fourth quarter of 2012, that storyline is going to be changing, and it's going to just be, so unless something went astray on the demand side, absolutely, I think you can beat those highs late this year.
Ken, thanks a lot, and we'll see you next time on the Beef Market Update.
Okay, thanks, Sean.